Okay, so let's break down gold. So usually I like to start with a higher time frame analysis. Usually your higher time frame analysis carries more weight, so you can mark trend lines, you can mark horizontal rays, aka like your support and resistance. And usually they carry, like I said, a lot more weight, so you can trust the analysis on it a lot better. So anyways, let's go ahead and break this down. So usually as I'm walking through and doing like my weekly review or even my weekly analysis, I'm going to spend some time making notes, either in a text box or just mental notes along the way. Usually because I'm so active in the market, I pretty much know what's happening. Most, I would say 100% of the time I know what's happening. So I'm just going to show you as I go along. This was old daily high. Okay. Let me take this yellow dot off. All right, so check it out. Now that we have our old daily high marked, we can now look over here at gold. Let's take some of this off. But boom. Move this over here just because I love this low. And then we're going to move this one right here because that's another lovely low that got missed. Delete some of these off. Delete some of this off. Mark this up. So from the first glance, let's go ahead and clean this up too, just because, and we'll leave that one because this is our old daily high. Okay. So we see that the market got broken here. And this was our first sign that we're starting to form a correction, right? So off this correction, this is the low right here that I'm going to be keeping an eye out for. Mainly because it never got taken out. Okay. So it's pretty obvious now, since price is played out, that you're like, of course that's a zone. Of course price would come back over there and take that out. But sometimes it's not that obvious. Okay. I've just zoomed in somehow on my screen. We'll make it work. Oh, there it goes. Okay. So now that we're over here, this is on the 4-hour time frame. Okay, so again, the 4-hour is still a higher time frame, where the markups that you put on the higher time frames again carry more weight. So we're gonna go ahead, and this is a high. Okay, I already have it marked. I'll just draw an arrow. That was a horrible arrow. Let's see. Boom. That's the high I marked. So that's what we're going to keep. As price starts to form lower highs, this is where I'm going to start drawing my trend line on that you see. So again, you can see what time frame I drew this trend line on. That's the 1 hour. But I'm also going to go here and draw that trend line on and realize that these are lows. Okay, this is a low down here that I've marked on a lower time frame. Okay, pay attention to that. This is a low that I've spotted that price does not have to come back to if it doesn't want to. on a lower time frame. So I'm going to go down now to my 1 hour, get the drawing off my chart. And you can see in the market, price does two things. Goes up, forms a higher high, higher low, higher high, higher low, higher high. Okay, and then also does this. Lower low, that's just an arrow. Let me grab this. Okay, lower low, lower high, lower low, lower high, lower low, lower high. The trend continues. An upwards trend, downwards trend. Okay. But also what price does in between there is it will move side to side. Okay. That's the most common use scenario that you get explained when you get into trading, right? So they would call this a downtrend, give you a little trend line, call this an uptrend, give you a trend line to explain it. And then, of course, this is what they call consolidation in fancy layman terms. So here's our consolidation, or a flag. That's something else you'll get told. This is a flag. And when you look over here, mine's kind of drawn slanted at an angle. But let me explain to you why. In the market, this is what you would call a channel, because price isn't just moving side to side, right? Ranging, as they would say. It's not just ranging. It's moving in a downwards direction, but it's still kind of moving at a sideways angle, but just slowly going down. And in this, we would call it a channel. In this channel, usually that indicates that price is slowing down. It's giving us some form of structure. Like in this situation, you'd be looking for this, a channel. Because now there's parts to it. It's a 1, it's a 2, and another push down 3, and then it range back out again. Okay, so now in this channel, you're starting to get some structure. So let's take those off. So now you see I have a channel drawn, and the market's the market. It doesn't have to be perfect. Most people want it wick to wick, which you could do that, sure. But again, a trend line, since this is already on a lower time frame, like the 1 hour, it doesn't have to be perfect. You know, you want to find the most touches, or even in some cases, you have to read between the line and find like areas like this. Let me explain. Most people would freak out if they saw me do this, okay? Because I just drew on the most relevant pieces of price. We have touches here, okay? Price is above here, right? Or it's below here. So you could read between the lines in that situation and use that as the trend line, but you don't always have to. So in this situation, I'm just going to find the most relevant touches. Touch here, touch here, touch here, mass psychology, touch here, right? So you can kind of see all the touches that you're getting for this trend line. So it's giving indication that the market's one in a downward trend still, but also it likes to respect that area. So let's walk you through one of the trades I was looking at for this week. Let's take this off. So price pushed off this area. It wicked down here, touched it, pushed up, came back out, took out retail traders, mass psychology, and now it slowly moved up. Now, if you were scaled in, you could have seen this as buy opportunity, but I wasn't even looking at it for a buy opportunity, right? Here's what I was looking at, is that when you drop down now into your 30-minute. And just for your understanding, I'm definitely a intraday trader. I'm not holding trades for multiple days at a time. I guess it'd be more like scalping in this situation, if you want to give it a term. I'm looking for price since I've seen it reject a couple times off here. I'm going to mark this high. And really, I don't even want to use this, like, because price, I would have used this high right here. Like, nah, I mean, I guess I could. We'll just say that, or nah, I'm going to take that off. I'm not going to mark a high there. Since there's nothing here, I'm really just playing off the feel of this trend line. Okay, in this situation, what I would be doing is I'd be wanting to see a break above here. Okay, that could insinuate prices have to continue to go down. It could come back up top and take out these highs. So I could look for a break above and then a test back below and then take a reduced risk. Okay, so this is what it'd look like in this situation. I'd wait for a push above, break down below, get some type of downwards movement, come back up. And we could be looking for top side, okay? Giving you a flag, you know, some type of bull flag in that situation. Take that off. But again, I would just be using that as a reference, understanding that this doesn't really carry any weight, and I'm already dropped down into a lower time frame, so it'd be kind of, you know, like iffy because all the highs got taken out off of this candle. So price comes up, wicks above, takes out some retail traders on the high. Everyone starts buying, okay? Catches them. They think the market's going to move away because it's the first push down off of this trend line. Market comes back up, takes them out. In this situation, we could be looking for a double top, or again, a break back above. And what we're doing is I'm setting, okay, I'm going to show you. This is an entry on the 15-minute that you can look for. Draw your trend line, okay? This is what you call a pattern within a pattern when you see something like this. Free game, such good sauce. 1 touch, 2 touch, 3 touch. You could take the trade literally below this if you want to take a reduced, or right here. Take your trade for the sell below here. And then especially after it rejected and pushed back up, you could place your sell stop below here, stop loss here, and then you're targeting your lows. But this was the position I was looking for because I was willing to take it earlier, and I didn't end up getting the trade till much later. So again, we were targeting these lows here. Boom. Why that? I will show you. Price moved up in this kind of angle. Okay. Price never came down and grabbed these lows before pushing back up. Usually you get some type of structure like that. So it formed this. It didn't even grab this one. So we were looking for it to come back down and take out these lows once it failed making higher highs. Catch that again. We were looking for it to come back, take out some lows before going back up and taking out some highs. So again, pattern within a pattern. We have an ascending channel. Oops. And this is not a, I guess, quote unquote, a beginner instructional video. This is just going over and letting you see the market with opportunities. Okay. So pattern within a pattern. Overall, you have this giant channel forming. Okay. But also, this channel is connected, but price isn't always perfect. So it came back up, wicked out the highs, and then it came back, made a new bottom, and closed back up and is floating, giving you the continuation of the channel right there. So that's a perfect ascending channel other than the mass psychology. So we're catching off the break. Okay, that was our entry. Even if you missed that entry and you didn't catch it from there, you can catch the next pattern that forms. We get our initial push down. It breaks this low, which is the most important thing. Look, it broke one low here, another low here. Price chops up below it, forms another flag. Okay, you had a double top in this area, and I'm gonna show you it. And I do, like, I trade on these time frames. Sheesh, this thing's clean on the 5. Y'all should see the 1 minute. Thing's no joke. Okay, so there's the flag. Again, you have to read between the lines when you're trading. Okay, you can't just like you can't try and be perfect. Like sometimes you have to like fudge the lines so that you can see it better. Okay, like if I'm just like, you ever blurred your vision? You know, you blur your vision so you can see better. Like that's kind of what you need to do sometimes in trading, to read between the lines so you can see through the mass psychology. Okay, let's go back. So yeah, there is a high here that never got taken out. Look, right here. So we have a nice flag forming. Again, same thing within the channel we just saw. If you take it and just, again, read between the lines, avoid this. Don't even look at this. Okay, that's mass psychology coming out, taking out a high. That's a perfect flag. A perfect flag. Look, let's be conservative. Let's say you want to take it below this. Just inside, that's 10 pips. Say 10 pip stop loss. And even if you just took 50 pips, that is a good amount depending on your standard. Okay. This would have been the first profit target, second profit target, and then obviously back down here, third profit target hit. With me, I'm not the person that really like sets. This sounds so bad, but I'm not a huge fan of setting stop losses. Like, I've been trading long enough that if I'm entering a trade, then like I want it to play out. I'm managing it appropriately. I'm at the charts. Some people are like, but what about if the market wicks up or wicks down? Okay. With the strategy, let's say strategy that we operate out of, my friend and I, it's not really like that. You usually have a good feeling of what's going on in the market. Okay, let's move on to one more. Another beautiful channel. Again, read between the lines. You know what I mean? Like, look. This was, let me show you why I put the trend line here. Okay, something else that most people aren't even aware of. This was the first push down. So that's the start of this channel that formed with the bottom here. Why didn't I use this? Again, mass psychology. Okay, not even important. So you drew the trend off the top of this. Again, mass psychology. Goes up 1, 2, 3, and also pay attention. Look, we're getting these nice scoops here. Some people are going to say, oh, that's a head and shoulders. Sure, if you see a head and shoulders, make it a head and shoulders. But it doesn't have to be a head and shoulders. Scoops, again, it's what you're accustomed to seeing. Whatever works for you. So in this situation, when I start to see these nice ice cream scoops, some people start to see head and shoulders that are forming. That gives me a great indication that the market's slowing down. Okay, now check this. Inside of a channel. It's slowing down inside of a channel. That's huge. That is a even bigger indication that price is slowing down. So not only is it ranging in segments, you get 1 push, 2, 3 push, boom, up. And not only is it coming up, on the third wave, okay, if you're familiar with Elliott's wave, you get 1, 2, 3, and then usually you get something like this, and then it finally breaks the low, and then you start a new trend. Okay? So it gives us a beautiful pattern and a beautiful ascending channel. Just read between the lines. Don't get caught up in the nonsense. So we're getting an ascending channel. 1, that is an indication that price is slowing down. Yo, what's up, fam? I don't know how to give you a like, but I see you. So we get a beautiful ascending channel. It's going to the top of a trend line. Okay, not only is it going to the top of a trend line, but it's at a double top area. It touches the trend line. This thing is gorgeous. Look at this. 1, 2, 3. 1, 2, 3. The hover. Boom. Sheesh. That's good. So look, it comes up. It hits this trend line, this double top, and this trend line. Price immediately rejects. You get that first push back up, and if we drop down again, some people are freaking out right now. They're like, I cannot believe you just dropped down another time frame. Like, guess what? I did. I dropped down to the 1 minute. There's nothing you can do about it. We're absolute maniacs here. Like, dang, that's too many good trades. Let me get out of there. They can't see all that. Let me go back to last week's trades. Okay, check this out. We're almost there. Boom, here we are. Oh my gosh, dude. If you didn't know this was the 1 minute, I'm telling you, man, if you didn't know this was the 1 minute, you could think this was the hour or the 4 hour. Structure, but also you have to pay attention to like what the bigger overall analysis, the overall time frame is. Okay, so we finally get the rejection right here. Check it out. We get the rejection, we get the push down, and then price starts its trend, starts its downtrend. Okay. If you missed all this, which is no big deal, you shouldn't have FOMO about missing out on a trade. As a wise mentor once said, there's going to be more than one bus that leaves the station every single day. So if you miss the first bus or you miss the trade up here, don't rush into the next one. Sit back, be patient, and catch that fish. Sit back in your John boat, crack a cold one, right? Wait for this next trade to roll in. So that's what we did here. Say you don't have the perfect eyes, you miss this liquidity zone, okay, this potential sell-off point right here. That's something that we would have looked at. You could have now caught this beautiful flag, and this instrument that I'm using is called a regression trend. Sometimes I use it when I just want to see a structure a little bit better. So it kind of shows you right there. You're at a trend line. It rejected the top. You've already gotten a clear push down. Look at this. Look at this. It broke the lows. Okay. Not only did it break the lows, it's hovering below the lows. You're now clearly in a downtrend. It comes to the trend line. It hovers again. Here's what you do. Wait for it. Wait for it. Entry here. Okay. Entry there. Stop inside of the structure, and now we're just going to target the lows. And if you're wondering, like, okay, well, how do you know when to take profit? No sweat. Got you right here. Well, we're going to use that one. Sheesh. I think it's gold as it is. No pun intended. This is actually gold. And also, we're going to use this one. Let me show you why I'm choosing these targets. Okay. One, usually price, if you're drawing an ascending angle, it likes to fill 90% of this. Okay. So this is 90%. If this is, this is 100%. This is 90%. So instead of being greedy and trying to take the full 100%, let's just be conservative. Let's go with 90% fill to the bottom of this channel. Okay. We're going to use the 90%, which happens to be, coincidentally, this low that got formed. Market pushed down, came back up, pushed higher, came back down, and never took out this low. Now, it's not that it's gospel. It's just I've seen over the past 4.5 years now, price usually when it reaches an area like this, likes to come back down, take out that low. Some people call it a double bottom or a liquidity grab, whatever floats your boat. You can call it what you want. We're going to use that as target number 2, and this was target number 1. Okay, again, look, price came down, boop, came back up, didn't take out the low, and instead it pushed higher, took out this low here, and again pushed higher, right? And then if we look over to our right, look, it never took out this low. Instead, that became our touch on our trend line before we pushed higher. Let's take off some of these drawings. So now that we have our targets, you kind of have a clear indication of what your targets are. Let's go back over here and shkaboom. What do we have? We have a reduced risk entry with a 6 pip stop loss on the 1 minute time frame for a take profit of 80 points or 80 pips or 80 ticks, whatever terminology you want to call it. Your risk to reward ratio off of this trade was a 13.61. But let's say we're just going to call it luck. However, let's see if there's anything else in the market that looks similar to this where we could find opportunities. Okay. So in this situation, price, check this out. Let's delete our profits. So that was our first trade, a reduced risk off of a flag. Okay, we're going to zoom out, which you should be doing almost every single trade. Take that one off. And now we're going to go ahead and zoom out to our 5-minute and our 15-minute time frame. And if you're not used to like back testing or playing with structure like this, like don't use the bar replay right away. Like, don't use the bar replay right away because you're going to get too lost in like whatever's happening. Here's what'll really happen. Your eyes aren't accustomed enough to be able to know like, oh wait, I need to zoom out. Or I've been trading for an hour and I still haven't zoomed out to look at and form a different opinion. So you can kind of get sucked in on one time frame, and then you start getting upset. You start over trading. You start taking trades and doubting yourself. Start doubting your strategy. And I'm a fan of back testing. Don't get me wrong, but I think you should back test with intent. Okay, so look over here. Pay attention. Here it goes. Right here, we just take off our daily liquidity now. This low, it formed this. Boom, push up, came down, pushed higher, and boom, a new low was formed that, guess what? It never got taken out. I'm pretty sure some strategies call this like a fair value gap or something like that. I'm not really sure, but I just call it trading. So we're going to look at this low, and that's our target, okay? Our other targets already got taken out on this side, okay? That was our channel. That was our, you can't even hardly see it. That was our channel. That was our flag. First target got taken out, okay? Here is where some people are going to get mixed up. If you rushed in and you don't have something like this, like technical analysis on your trade, okay, you're going to mark this low. Even if you got the low right, hear me out, even if you got the low right, you're going to get caught in mass psychology, okay? And that's what happens in this. People are trading. They see an area just like this. Let's use a box. They draw a resistance. Price comes. Boy, this is good. Watch this. Price comes. This is our trend, okay? It bounces off. Coincidentally, it pushes higher, comes down, and look, it slows down, okay? Now, everyone and their mom is like, oh, look, it's a triangle, and now it's going to reverse. And it hits the reverse, all right. Reverse is your freaking margin. Takes you straight out of the trade, bro. You got no capital left, okay? They use a box. They're waiting for it to push higher, and it doesn't. Guess what it does? The freaking floor drops out. So let's show you how you can spot that and capitalize, though. Let's not just stop at the halfway point. Let's take this low. Look, you'll notice me doing something. As soon as it's playing out to a point, as soon as it's filling structure, I'm taking stuff off. Like, and the reason being is because say I left this this line down here, okay, for that liquidity, and I left it down here, I'm gonna forever be in my head as it approaches this area thinking that it's gonna reverse for whatever reason. Instead, sometimes you just gotta back up, clean your chart, okay? Back up, clean your chart, and now we can look for some lows right here. We're gonna go back over. There's our low right there. Boom. This was the new low that got formed. That's our target. Our next low that we're looking for is this area right here. And let me show you why I'm kind of reading between the lines right here, and I'm going to use this low, okay? I can use it. I'm not going to really use it just off of this fact, okay? Like there's kind of a trend down, like 1, 2, 3. Price took it out off of this low. And let me explain a little more. It pushes up, it pushes down, forms a low, it pushes higher, and then it takes it out, and then it moves up. Okay. So that's kind of the low I was checking out, but it's not that good. It's still valid. Okay. And let me tell you, like, valid. Valid means like, that's pretty much it. Like, valid's like, it's okay. So instead, what I'm going to do is I'm going to find this point right here. We got a push here, up, rejection, and I'm just going to use this as a reference. You can see my trend, or my horizontal ray right there. That's my new reference point, and I'm marking that as a 1 hour liquidity zone. Okay, that's a 1 hour low that I think can be taken out. That was our initial. Okay, so that was our first target. Sometimes these things are so textbook, it's crazy. That's our high. Oh, okay, hold on, sorry. There it is. I got lost for a second. We're back. Okay, so we got our first trade off of this. It filled the 90% of this bottom, okay, right here. That was our 90% of this trade. Beautiful, beautiful, beautiful. But now you're like, okay, but how do I know if it's going to go upwards or if it's going to continue in the direction? Truthfully, you really never do. But here's what gives me an indication that it could continue lower. One, I'm going to take that freaking box off so I don't get confused. But then I'm going to do this. I'm going to read between the lines and drop down to the 5 minute. We're going to draw this right here. Again, y'all, read between the lines. This is the 5 minute. And then we would drop down to the 1 minute. Again, these are scalps. Okay, we're not going to be holding these for days at a time. We're going to be mostly looking at these things for like 2 hours. Okay. And I feel like price just really opens up. Like, especially this past week, it just opened up. Okay. Dude, what a beautiful flag. Jeez Louise. Okay, check this out. This is a flag. Look at this. Again, let's read between the lines. This was a high that never got taken out. Okay, it went up, went higher, and then it dropped. And this was the wick that was supposed to fill it right here. But price never came back up and filled it. So we are keeping an eye on it now. Price instead continues to drop lower. This is when we start getting this channel, right? Lower low, lower high. Lower high. No, what was it? Higher low, higher high. Jeez. You can tell them at the end of this session right here. Okay, so we're going to ignore this. We're going to be looking at our trend. Okay, we're keeping our trend on the 1 minute as a paperweight. It is nothing other than that. It is just something there to hold it down. You got a 1 touch, a 2 touch, and we're looking for a 3rd touch off this trend. But guess what happens? Surprisingly, the market pushes higher, takes all the retail traders out that were taking their orders here for sells, okay? Takes them out, grabs the liquidity up top, it drops back below, and then you could be looking for a sell right back below here. If you weren't comfortable taking that, that's no sweat. That's a 10 pip stop loss again. We'd just be looking to target the bottom of this. You could hold that one if you wanted to, but again, let's say you missed that bus, okay? You wanted the next trade, but guess what it does again? It forms a pattern within a pattern. So if you look, this right here is pretty much the exact same thing. Look at that. It's the bigger thing. It just played out better. We get a sell here. If you missed that one, you could have caught the double top here. Okay, grabs the liquidity, drops back down below, and then it comes back up. Say you missed that one. No sweat. Price again forms an ascending channel, comes back up to this area. You as a trader, as soon as it pushes up higher again, you just put your sell right there. Stop loss below this, an 8 pip stop loss. Let's just say you want to target this low, the bottom of this channel. Again, 50 pips, but we had it lower. Where is it? McGoderson. Right here. Look at this. Yeeks. And what does she do? She falls for 155 points. If y'all don't think we're taking trades like this, then we're just going to have to start streaming more. Because every other day comes trade opportunities with the strategy of 80 points, 100 points, 200 points, because you're waiting, you're paying attention to structure, and you're just taking the market as it is. Okay, well, sweet, that's it for me. Let me stop sharing. So if you want more content like this, comment below. Review some of this. There's some beautiful trade opportunities and some patterns that you'll want to pay attention to, especially for gold going into this next year. I will go ahead and say the channels and the stuff that I'm looking at the most is ascending channels, descending channels. Okay, I'm looking for flags. And most importantly, I'm looking for liquidity zones at the top of ascending and descending channels. Excuse me. So yeah, I hope you enjoyed the stream. Hopefully you get some, here fishy. Hopefully you got some value out of this. And my friend, the mamapreneur you're seeing in the chat, her and I will be streaming a lot more of our trading sessions. We've been trading for years, 4.5 years to be exact. Jeez, dude, look at this freaking structure, y'all. I mean, goodness gracious. Goodness gracious. Goodness freaking gracious. Look at this. Even their regression trends picking it out, y'all. Let me show you how I read that one, though. Right there. Boop. Give us that cheddar cheese. And if that was too ugly, that's no sweat. You could have caught that. Or that. It's not like there's only like 4 or 5 opportunities within each trade. But there it is. So, yeah, cool. I'll let y'all later. Oh, yeah. I'm not sharing my screen. Sweet, thanks. Oopsies. Maybe I should share it one more time. Just to show you. Just to show you this beaut. These McGoaters and trades. The trades within the trades within the trades within the trades within the freaking trades. Yep. So again, till next time. Have a lovely freaking day. And yeah, we'll drop us a forecasting session here soon so you can look at the market for the beginning of the week. See you then.